keep some dry powder on hand just in case this beautiful party ends with very little warning. Hey everyone, let's do a recap of what happened last week. The recap is easy. It was a green week again. The bulls were completely in charge of the price action. Even when we had red ticks, they hardly lasted more than a few hours. We are in a buy the dip environment until something breaks. We're coming up on the election. Not sure how that's going to play out. What were they expecting? I know what they want. Not sure if they'll get it. It looks like it. But what happens thereafter? Also, they are completely ignoring the geopolitical risk. I cannot tell you how bad the story it is outside the US, and we're talking, I don't know, dozens of nations actively fighting each other with weapons of war, like actively fighting each other. And the VIX cannot hold 18. And the average of the VIX is like almost 20. Puzzling. So let's focus on the charts and see what we can do with that. Before I do that, as far as emotional triggers for the week, we have a bunch of Fed heads talking. I don't know what they have to say. I mean, some of them are the same people over and over. Until then, let's focus on the chart. And what I did this week, same as the last couple of weeks, and it's been very handy, is to put a picture as to where the market makers expect the price action to be. And we'll start with the SPY. And first of all, we are at all-time highs. So focus on the purple boxes on the daily basis. So we saw last week, we burst on the first day and we punched through 3 levels, and then we drifted lower and we ended the week right inside the orange box, which is the goal. So this is where the market makers expect the price action to be. And let's jump into the SPX version of this. And I have to tell you that the futures are open right now. And there are some pretty serious development in the Middle East over the weekend. It doesn't care. They don't care because we are opening up on the futures time. I did not put a fan for the Qs. I will starting next week. I didn't get my act together. But look how coiled they are. They have a high, they have a low from last week, and they're just waiting for a reason to go. The Qs are still lagging. They haven't made another high. So we are rallying on a AI thesis, correct? Why are the banks leading up and not the tech companies that are bringing us AI? Why did it take NVIDIA so long to crack into a new high when banks cannot stop making highs? So these are like rhetorical questions. I'm questioning the validity of the way we're rallying. And next, I will tackle the small caps. This is their best attempt. This blue box you see on my screen, this is the battle from 2021, a battle from 2021. It's not the highs, but it was a problem in 2021. And look how surgical they are, touching it and falling. So this red W says that we are vulnerable, in this case, to drift lower. Imagine the QQQ rallies. Probably CNBC is going to say rotation and some money will come out of this into the QQQ and vice versa. I'm interested to see if they're going to drop towards 220 or 221 or just explode higher. So let's talk components. I'm going to start with Tesla just because it's an exciting stock. So far, the forecast that I had for it played out well. You can see here we had highlighted the 2 limits and what happens if we cross one, and that's what happened. They crossed it lower. And as a car company, it's super expensive stock, but it isn't a car company. They just delayed that extra oomph that comes from another source of income. So how about I tell you this? It is so coiled that I think it's going to be at 202 or lower, or at 240 or higher this week. So maybe buying a straddle would be a good bet on it. Take 10 minutes out of your time any day of the week before it reports. Pop in and we'll see what the options data is telling us, where the market makers are lined up for this one. We can't talk about factors without mentioning NVIDIA. NVIDIA is the stock market and vice versa. It finally went to an all-time high, 140, and now it's toying with that. We highlighted it 3 weeks ago. I said 2 stocks might explode, this one or Apple are my nominees. They both did that. If the markets are higher, this one's going to be a contributor. Apple ran towards that 240, not quite. Maybe they'll push it this week before they decide to retrace backwards. Among all of the mega caps, this is the one that I like the least for as long as Tim Cook is in charge. Now, it could super spike if there's talks of him leaving. Microsoft is very well behaved. Out of all of them, this would be my pick. This one, I know it can crank out the cash for a long time because it has been doing it. Look at how tight that price action is. You can see how we were trading in such a wide range, and now we're pinpoint. Usually when that happens, if you remember Boeing, my comments on Boeing, I did those in purple. I said, I don't know, up or down, we are going to explode one way or another. So those two question marks are in play. Again, maybe a straddle works best, but here's what I would do. Nothing until it moves, and if it moves down, I'll catch the falling knife. This is an excellent company. If it falls towards 400 or 390, I would be brave enough to sell puts or put spreads in order to catch the falling knife and buy some shares down there. So I hate to regurgitate the same message over and over, but the market is behaving the same way over and over. So as an investor, I'm not doing anything here. As a trader, there's so much to be done. I'm concerned about the state of the consumer. We are spending at our limits and on borrowed money. If we stop spending for whatever reason, or if we have a debt default problem, the economy situation can turn on a dime. And so I don't want to be caught all in. It's not a good idea to be completely deployed. The statement of keep some dry powder on hand just in case this party ends without a warning.